In a world where jobs are how most people make money, one man, one desire, one challenge dares to break the mold. Welcome to the Old Dogs REI Network, where we don't work for money. Money works for us. Coming soon. Viewer discretion advised.
Welcome to the Old Dogs REI Network, where cash flow is king. Real estate investing, the means, so you can enjoy your retirement dreams. This is the show where we cut right to the chase. No sales pitch, no long monologues, just simple how-to real estate investing advice, so you can earn the passive income you need to enjoy your retirement today. And now, your host and chief old dog, Bill Manacero.
Welcome to the Old Dogs REI Network. I'm your host, Bill Manacero, and this is the show where 50-plussers and anyone else who wants to join us get solid, no sales pitch real estate investing advice to help generate real cash flow. This podcast airs twice weekly on Mondays and Fridays, and if you aren't already a subscriber, go to iTunes or Apple Podcasts, type in Old Dogs, spelled D-A-W-G-S, find our podcast, and subscribe. Well, we have a different kind of show for you today. We're doing something a little different. Instead of having, one guest on to ask a bunch of questions, I'm inviting a bunch of guests, to ask just one question. So when I say a bunch of guests, I mean 4 former podcast guests that have been on our show fairly recently. And I'm going to ask them this question. What would you do today if you suddenly received, generated, or inherited $1 million? Now, I know that's kind of a weird question, but when I was a kid, $1 million was a lot of money. I remember, if you even saw one, if you knew anybody that had $1 million, they were a millionaire, they were rich, right? In fact, it seemed like that was all the money a person would ever need. Well, thanks to our ever-growing inflationary economy, getting worse all the time, 1 million ain't all that anymore. But for some people, it can certainly make a huge difference, especially if you invest it right. And that's where this came about. Why am I even asking this question? And because it's a situation that is happening more and more, and it's not all that unlikely a scenario. In fact, I would venture to say that there are a number of you listening that have had to deal with this exact question. What do I do with this $1 million here, or maybe more than 1 million? But this is kind of what's happening, okay? If you look at inheriting money, there are a vast number of baby boomers out there, and many of these baby boomers' parents are passing away and leaving inheritances to them. And then over the next decade, millennials are expected to inherit over $68 trillion from their baby boomer parents, according to an October 2019 study from real estate firm Coldwell Banker. So inheritance is probably one of the biggest areas, most common areas where that'll happen. But listening to this podcast, there's a lot of real estate investors, and investors also have encounters with the $1 million at various times. Now, I'm sure there's plenty of that listening that have had properties valued over $1 million. Well, right now, a lot of people are selling properties because, one, they are just topping out in terms of price right now. If you want to get rid of some of those old properties you're not real thrilled with, people are selling them off. And in some cases, they will be receiving $1 million check or the proceeds or the profits, maybe beyond that. So there are people who are maybe not even real estate investors who maybe have sold a home where they have received a check for $1 million or more, just selling off their property. In California, this is not uncommon, especially if they own the home outright. So the real estate side, that's another place. There are those that are already in retirement. Some of you listening to this show right now that have their multi-million-dollar retirement nest eggs and are cracking that open and deciding how to invest within that to get a better return on your investment. And then those that are business people that maybe sold a business. Maybe you had stock options in a business you were involved with. There's various things there that might have brought you that $1 million check. So, the many people who have had or will have to deal with this question, what do I do with the money? To answer the question, I invited 4 previous guests from the Old Dogs REI Network podcast who have both real estate investing background as well as personal finance experience, or maybe that's even part of their business, to give their take on how they would invest and spend the money. So these are folks that, as I said, are recent guests, and they are Joe DeSanto, Coach Chad Carson, Josh Miller, and Rachel Richards. All are fairly recent guests that were asked to participate in this show. So it's a little bit different than we normally do. I am going to go ahead and introduce you to these folks, and they're going to give you their take on this. Our first guest is Joe DeSanto. Now, Joe DeSanto built a multi-million-dollar post-production company, produced critically acclaimed films and an Emmy award-winning TV show, invested millions of dollars in real estate, and semi-retired by the beach at the age of 43. Today, he shares a lifetime of fiscal know-how via his website, Play Louder, an online resource that helps individuals and business owners increase their net worth and plan better for their future. Joe, welcome to the show, and I'm going to ask you our first question here. What would you do today if you suddenly received $1 million?
It's a tough question in a few ways. I mean, it's a fun question. It'd be an awesome piece of reality to deal with, that's for sure. But it's an interesting question to answer. And I guess it depends. I would say, doesn't everything start with it depends? But it does depend on where you are in life. It's a completely different answer, I think, for someone that's young and maybe, just starting their career, doesn't really have any money, versus someone that's older, towards maybe the end of their working years, has some money, but maybe doesn't have enough. So for them, it'd be like a real treat. I guess I feel like I should say that $1 million, it doesn't solve all your problems. It's not like game over, never have to work for money again. I don't think. I guess it could be if you were a super fire person and you were super frugal. It could be, and you were willing to maybe move to South America, maybe in Ecuador or whatever. You probably could make it pretty far at $1 million. But in America, $1 million isn't really it's not like retire on easy street. Sadly, and actually, this is an issue that I kind of wrestle with a little bit as a personal finance advisor. And if you look at conventional retirement, wisdom, retirement math, the basic gist is you save a pot of money, and you're not supposed to spend your money when you hit retirement. You're supposed to have your money produce, a return, which will be your income, right? And the basic wisdom is that, you can kind of count on hopefully an average 7% return, and that theory has you can poke holes in it right away. But if you got 7%, you'd take 4% for your spending money. You keep 3% in the account. And the 3% stays in the account, so the account can keep up with inflation, right? So that means every year your 4% withdrawal can keep up with inflation, and then the pot, and the way that's happening is that the pot of money, grows by 3% every year, keeping up with inflation, and you kind of have a perpetual money machine. And if you had $1 million pot of money, by that formula, you would have $40,000 of annual income, and that might even be pre-tax. So the bummer of like conventional retirement wisdom is that you got to have a lot of money saved in order to live on maybe $100,000 a year. You gotta have $2.5 million saved up. And I think statistically almost nobody actually does that. I mean, it's like a really small percentage of people that have saved that much money, and probably the people that do have way more than that, And then the people that don't, I think, have more, anywhere from 100 to 500. So if you're young, you can't just say I'm done, But I think you want to invest that money in a few different ways. Like if I were young, I mean, I kind of things I think about still, I'd probably put some of it personally in cryptocurrency, a variety of cryptocurrencies. I wouldn't put all of it. Maybe 10% I put in cryptocurrency. If it happened today, I'd be scared to plop a lump sum of money into the market, quote unquote, and the S&P right now at its all-time highs, and also with potentially a crash coming. I mean, no one's a soothsayer, and who knows, maybe a crash won't come, but it just seems like with the debt the way it is, and what's happened, I don't know, it just seems like something's got to give. So I'd be scared to plop a lump sum in there, but you could either wait and see if the market kind of took a hit, plump a lump sum in, or you could say, listen, I'm going to choose an interval to invest this money in the market over time. And how much that would be, I don't know. I might maybe say 200,000 to 300,000, and then the rest I'd probably go into the kind of personally owned real estate, maybe single family to up to 4 unit rentals. With the rest, obviously you're going to get a lot of leverage with that, and you're going to essentially be focused, I think, there on the leveraged appreciation that happens. I mean, I've owned a lot of single family rentals, and they're not like cash flow cows. They really paid off for me through appreciation. So I think if you're young, you're going to play the equity appreciation game. Now, if you're older and you're getting close to retirement, or you're in retirement, your thinking is probably more like, how do I turn this into spendable cash now without just burning it? And so then you kind of switching your investment approach and philosophy probably to be less equity building oriented and more cash flow oriented. Where lately my research sort of gives me some level of more comfort in that realm is doing more commercial real estate, and that probably would happen through syndications versus actually owning the properties, because commercial real estate is generally more expensive, and depending on how much you have, you might not want to make the level of commitment to own it yourself. But there's a lot of, I think, kind of more probably reliable cash flow opportunities in commercial, particularly potentially with single tenant like triple net, or even, stuff like medical office, stuff that's just hopefully going to be fairly consistent. I like the idea of medical office. It just seems like good probability those people aren't going to move. They were essential workers through COVID, all those sorts of things. You want to look for something, I think, that has the most foolproof plan as you can get to provide cash flow. You could also consider dividend investing in that sense. But to me, dividend investing is kind of risky because the stocks, even though they're blue chips, they go up and down drastically. And, but if there's a crash and dividend stocks your blue chips basically take a dump and their dividends, pop up, I would definitely probably split it, or even put a little bit more in the blue chip equities, going for a higher dividend potentially. This is not an exciting answer though, because $1 million it's not the mega ball or whatever, it's a decent amount of money to be working with, but it's not enough to be on easy street, unfortunately. I will say too, though, being it's free money, maybe don't just overthink it in terms of making it an investment, making investments. Maybe just go have some fun. If you were young and you got $1 million popped in your lap and you still got a lot of years to go earn money, I might quit my job and do a sabbatical and go travel the world for a year, basically, get some awesome perspective and fun and ideas and whatever. Spend $100,000, like go nuts. Just thank the lucky stars you got it dropped on you, and go have a great time, and then come back and invest the 900,000, and maybe you start a business. Maybe you do something like that as opposed to just investing it. I mean, I look at real estate, particularly like single family rentals and stuff you manage yourself, as a business. I think each house is basically a little business. So when you invest in real estate, you're having a business as far as I'm concerned. It's just not a full-time business. And it's also, though, not passive. That is for sure. I mean, managing rentals takes time and energy. And hell, you know what? Even if you were older, maybe if you were older and you had a good pot of money and this was like cherry on top, maybe you would retire a little bit early and go get to like having a good time and put the old 50-hour work week in your rearview mirror. I don't know, but you'd have to have, I think, more. Like I feel like $2.5 million personally is more of a comfortable amount of money to retire with, like where you're not going to run into probable, problems, I guess. But I know that's a crazy sounding amount of money, and it's like more than most people have. I mean, so I hate saying it, and it bums people out when I say it. But, that's why I'm always preaching, get prepared, you know what I mean? Like, think ahead. You're going to need more than you think you're going to need. Don't underestimate how much stuff's going to cost. Luckily, you can actually move to Ecuador, though, and live on like $2,000 a month. So, if all else fails, get yourself a subscription to International Living Magazine and get ready for some, international adventure for your retirement, I would say.
Well, that's great, Joe. That's great. You mentioned in the beginning something about 7%. Were you saying that the funds, I mean, if you had it in some place that it would be earning 7%? If so, where would you put it to earn that 7%?
Yeah, well, okay, so here, back to my concerns of modern financial thinking, right? I call it the conundrum of retirement. So this general retirement thinking is that you're making this quote-unquote magical 7% when you're retired, on average. You keep 3% on the account to keep up with inflation, you withdraw the 4%, right? But the problem with the fact that in order to make, in addition to the fact that in order to have $100,000 of retirement income, you need $2.5 million, in some account. You need to be making 7%. And usually when you're pulling up into retirement, you're thinking, I need to go with more secure investments because I don't want to lose my capital, right? And 7% is kind of like a pretty healthy return, really, and it's definitely going to involve likely a lot of equities. It's certainly not going to be a high ratio bond portfolio. So it's a conundrum. Like you're like, wow, I need 7% just to, and $2.5 million in the pot just to make $100,000. Well, what if I only get 3%? And you're like, well, there you go. That is a conundrum. You need to get this, pretty decent return in order to generate a good amount of spendable retirement income. Now, obviously, I kind of call that the Cadillac of retirement plans, in that it's perpetual income, theoretically. And you can obviously start digging into the principle of your pot in order to live your, the life you want to live. But when you do that, now you're sort of in this kind of race of, do I die first or run out of money first?
God.
Talking about retirement honestly can be pretty morbid, but I find it really funny. I always laugh at funerals too, so I guess that's why I'm laughing. But yeah, it's a tricky thing. So the question becomes is, where can I get this percentage and it can be relatively secure, where my capital is fairly well preserved, but I'm getting this good cash flow or good yield. And that, that's what the financial industry, they're all offering you their product, I guess, in order to solve that question. And where you get it, there's a whole host of places. Obviously, it's either going to be in equities, it's going to be a combination of equities and bonds, it's going to be in real estate, could be in alternatives, could be, I wouldn't go, like, at that point, like, I don't think, like, personally own like single family, multifamily real estate is very safe for cash flow. Like I don't think that's where you want to be in retirement. That's what I was saying. If you were younger, maybe go that route because you can have a good chance of building good equity. But I don't know. I feel like commercial real estate syndication, obviously with a good sponsor and everything. I don't know, real estate it's always felt safer to me. I feel like it's less rocky than the market. I mean, I'd hate to see my retirement pot, like, if you were retiring in 2007 or 2008 and you saw the market go down by 60%, you weren't feeling good. You were continue to work basically for 5 more years. So the market scares me for capital preservation, but long term, growth. Obviously, it's one of the best places. Obviously because it doesn't take any work either. So I don't know. That's getting to 7% is the magic question. There's no shortage of people providing you with solutions or potential solutions, but do they come to fruition? I don't know.
Wow, Joe. Well, thank you so much. This is fantastic information, and appreciate your coming on to share with us.
Absolutely. Hope it was helpful.
All right. Well, you take care.
You, man.
Our next guest is Chad Carson. Chad Carson is an entrepreneur, writer, and teacher who used real estate investing to reach financial independence before the age of 37. Soon after achieving financial independence, he traveled with his wife and 2 kids to live in Cuenca, Ecuador, for 17 months. Chad also wrote a best-selling book, Retire Early with Real Estate, published by Bigger Pockets, and hosts the popular podcast, Real Estate and Financial Independence. Chad, what would you do today if you suddenly received $1 million?
I love this question because it's something that I think about. I think it's very practical, but it also gets into your philosophy of investing. And for me, if $1 million just landed in my lap, it's in my business right now. My business partner and I are actually talking a lot about our strategy of where we are in our portfolio. And we're kind of on we're 18 years in. So we've accumulated a lot of rental properties. We have 110 units. Some of those are multifamily properties. But the main point of all that is at this stage, we feel like we have enough. And we're not trying to grow that bigger. There's some optimizations we could do with our portfolio, get some better properties here and there. But from an income standpoint, we feel like we're at enough. And so if $1 million landed in my lap, we're really very focused on the reducing risk side of our wealth building equation. And so we actually don't have a lot, proportionally as much debt as we used to have. When we first started buying properties, we probably had about 70% of what our portfolio was worth. So the asset value was about 70% debt. At this point, it's probably more like 25, 30% of that total. But even so, we feel like if we had $1 million that landed in our lap, and we're actually thinking about this with some real money that we have, we would pay off debt. And it's kind of one of those interesting conversations because when I debate with people, friends and other investors, and especially online in the social media sphere, talking about paying off any kind of debt in a world that, where you have inflation, seems like the best play for most people would be to have a really low interest loan period and then own assets they're going to appreciate. That is a really good play. But I look back at our situation, having no risk and kind of taking chips off the table, to use a poker metaphor, is what we would prefer to do. So we would pay off debt. It would increase our income. It would reduce our risk in case we had just a very rare anomaly. But if we had a Great Depression kind of situation, or we had rents that decreased in value and we had to make less income, we'd still be able to cover everything that we have. We wouldn't have any kind of issues. And so for us, it would be a pretty simple choice. That would be it.
Wow. That's a great response. Looking at $1 million, I know it's a lot different looking at it today than it was, back when I was a kid. It seemed like, all the money in the world. Do you think it's and this is just kind of an aside question to this. Do you suppose, let's say there's somebody that's listening that is just beginning and they don't have their portfolio together. They don't have, really anything other than just maybe educating themselves at this point. Would it be possible for somebody to, let's say, retire on $1 million today?
think you could get close. I mean, I've surveyed my audience of people who listen to my podcast. And when I wrote the book, Retire Early with Real Estate, I surveyed that audience as well. And there was kind of a consensus in my United States audience that it was about $60,000 to $80,000 per year was an income number that people felt comfortable that if they had that much money coming in, they'd be able to cover their kind of core expenses. Now, I know that number varies for everybody. You know, some people 200,000 is the number, some people 50,000 is the number. But if you worked it backwards from that, you said, let's just say I needed $60,000, $70,000 per year net. If you invested $1 million, let's just say no debt, you just bought these properties, I think it's realistic to find properties that you could have a rental yield of 6 to 8% if you really searched hard. I know this is a weird world where yields are really low, so that might be even more challenging today. But I think you could do it. I've looked at some deals lately that I think I could find in my market in the South and in South Carolina. So if somebody needed $60,000 to $80,000 per year, they could buy $1 million worth of real estate that made a 6 to 8% rental yield, and they could live off that money. And they'd also have a pretty nice inflation hedge that, you know, if they bought it correctly in the good locations, it could go up in value. They could, if they bought that in pieces, not just one big property, but bought pieces of properties, they could sell off some properties here and there to generate some capital gains and use that capital. They could refinance and pull out some debt, some cash from debt if they wanted to. So, I mean, I think that's a pretty solid portfolio that deals with a lot of different situations. And I'm also preaching to the choir. You know, I'm a believer in rental property income as a kind of core foundational component of your retirement. But I think $1 million even today for somebody with those needs could still do pretty well.
Oh, that's great. And you would probably focus more on single family homes?
Single family, small multifamily. I think you could probably get in, like in my market, you could probably get some duplexes, some fourplexes that generate that 6 to 8% return you're looking for. So yeah, but in some markets, single family houses, I love single family houses. So if you can make those yields work with a single family house, absolutely, because then it has the benefit of probably getting a little bit better appreciation rate if it's in a good location. I just love the flexibility of single family houses. You can sell them one at a time. You can rent them. You can refinance them. So I'm a big fan of single family. And I think duplexes, triplexes, quadruplexes have some of the benefits of a single family house. You can get the 30-year fixed financing with an owner occupant if you want to sell a property to somebody. So the idea of house hacking is so widespread now, thankfully, that a lot of people understand living in one unit, renting the other units out as a benefit. So houses are great, but I think duplexes, threeplexes, fourplexes kind of fit in that same category.
That's great. And you would, just to clarify, you'd pay cash for those properties with that money as opposed to going into any debt.
I probably would. I'm as you could tell from my answer to the original question.
Yes,
I'm in this phase of thinking that as economies and markets get weird, that there's nothing wrong with playing it conservative. And I have used debt my entire career. So I have no problem with that. And I think if most people put a reasonable down payment, 25% down, they get a 30-year fixed financing at 3.5%. And as long as the income has a good cushion on that income and they have some cash reserves, I have no problem. And I would probably do it again if I were starting over. But in this scenario where you get $1 million landing in your lap, you've almost won the game. Even if that's not enough for you and you need to grow a little bit more, why try to take a lot of risk when you've got this big winning? And so I think it's smart to play your cards differently depending on whether you've won the game or not. And when you get $1 million that comes in, I think there's something to just taking a real conservative approach. And you can always add some debt later on if it makes sense. If you feel like, well, $1 million is not going to cut it, I need to grow that to $2 million. You could then go refinance that, pull that money out, and do it later. But I think it could be smart just to set aside most of the $1 million, have $100,000 or $200,000 to play with on your first two acquisitions, go buy a couple properties, take a deep breath, see how that worked, learn some things from that, then go buy another two or three properties, take another deep breath, and then you kind of work through that $1 million in a reasonable fashion. Maybe not all at once. I don't think you should go out and buy $10,000, $100,000 houses on the first deal. I think it'd be better to kind of spread that out over a 6 to 12 month period or longer just to make sure you acquire things in a way that makes sense.
Yeah, that's great. That's great. Well, thank you very much, Coach Chad Carson, for your opinion on what you do with $1 million if it just dropped in your lap there.
Yeah, thanks for the question. It's great question, and a good exercise to think about for all of us, me included.
Well, thank you. I appreciate your being on. God bless.
Enjoyed it. Thank you.
Our third guest is Josh Miller. Now, after 10 years as a data engineer for a Fortune 3 company, Josh Miller left the corporate world to pursue full-time real estate investing. Utilizing his data skills, he acquired 120 rentals in only 18 months and purchased and sold hundreds more. In 2019, he founded GoForClose.com to help fellow investors achieve the same success he did by providing them with a full-service marketing agency to acquire off-market properties. Josh, what would you do today if you suddenly received $1 million?
So what I would do with $1 million, funny you should ask, but this situation has happened a couple times to me and once just a month ago. So it's a very fitting question and excited to be on here to answer that. With that said, I'm 37 years old. I have 3 kids. I'm financially free. And so my situation is going to be dramatically different than your situation or, the listener situation and everything else. So take that all with a grain of salt, that every person's situation is different and you should take that into mind. But I do have some personal rules that I think are sound that everyone could follow. And the first is to invest slow. So no matter what I say, no matter how good it sounds, invest slow, and if unsure, don't invest. I'd much rather not invest in a great deal than have invested in a bad deal. So that's kind of like my first underlying rule of everything is invest slow. The second rule I have is to really surround myself with people that are smarter than myself. I belong to a financial group that we meet on a weekly basis, and every single week I bring a deal, they bring a deal, and we talk about our deals, and we treat our finances like a business. And so if you're not in a group like that, I would highly advise you, whether you just got the $1 million or less or more, whatever, you should belong to a group. I'm going to give a plug here. I really love Keith. He runs this group called financialjourney.life. And it's just a great group of Christian guys and women, families that are all have some money that they have earned one way or another and are looking for great ways to invest. The third rule I follow is to diversify. So as you see, as I start talking specifics, I'm in a lot of different things. And then my fourth rule, because it's August, what am I saying? It's October 2021. Things are crazy right now. And I actually just listened to Jeremy Grantham, who I believe he's 83 years old, and he's accurately predicted the 2000 market crash, the 2007 market crash. He knows what he's talking about. And he thinks we're in the last year, actually, in 2020, he didn't think we were in a bubble. He's like, yeah, things are going up. This is good. Now he thinks we're in a bubble. He thinks that, the perfect trifecta of overpriced homes, overpriced stocks, low interest rates, we need to watch out. So with that said, that's kind of how I'm thinking about my investments as I get into things. So we're going to dive into my exact portfolio of what I put just recently, as of last month, $1 million into. We're going to talk about infinite banking. We're going to talk about Bitcoin, gold and silver mines, oil and gas, and of course, because this is a real estate show, some syndication deals. So is that all good, Bill? Am I good to go forward?
It's awesome. I can't wait.
Okay, great. All right. So the first is, and please interrupt me if any of this is like not making sense, but the first is infinite banking. And the reason I love infinite banking so much is because it allows me to have liquid cash. And right now, I do not know. There's so much uncertainty in the air, and things could crash next month, and I wouldn't be surprised. Things could crash in 3 years, and I wouldn't be surprised. So without knowing what to invest in. And while I try to figure out exactly where to invest all my money, I don't want it sitting in a bank account losing money because of inflation. I want it at least to be making money, but in what? So I have it in an infinite banking setup where I am putting all of my money, 100% of it, of the amount that I allocated to this, and I'll speak real numbers. I put 350,000 into my infinite banking policy, and the way it works is the 350,000 goes in, and I get to choose different index funds to invest in. So these are like the typical S&P 500s, where last 20 years they've been making about 9%. The beauty of it, though, is a couple things. The first real wow, amazing is there's a 0% floor in my investment. That means worst case tomorrow, the stock market crashes by 50%. My $350,000 is 100% safe. The most it will ever drop down to is $350,000. So if it goes great, there's no limit. So right now it could be making 14%, but on average it makes 9%. So that's the big, amazing feature of this, is that there's a 0% floor. The second really amazing thing about it is I still have access to all of that cash. Now that sounds unreal, but the way it works is you put your money in, and then that money will always stay and get invested. But the next day, and I did it, the very next day, you can withdraw up to 95% of your money back out and invest it again in whatever you want. So if I want to have cash just sitting there doing nothing, I can put 350,000 in, be making that 9% in these index funds, and then still pull out whatever that 95% is, 330,000, and have that cash just sitting there waiting. Now I don't need to do that because it only takes 1 day to withdraw and take that loan out. So I would just leave it in there. But let's say there is a little bit of something I want to invest in. I can take 100,000 of it out. I do pay interest on that 100,000. It's about 2.5%, 3%, somewhere in that range. But that interest rate is tax deductible. All the money that I'm earning, that original 350, is tax free. So it's a really great way to have liquid cash, invest in the stock market with zero risk, invest the same money twice. And I think a cherry on top, because I'm 37, is it's all going through a life insurance policy. And so at the end of the day, I'm going to have something like a $30 million life insurance policy that, hey, if everything goes to crap, I still have something for my kids that they can rely on. And it's just nice to be able to think about that. So before I move on to, I guess, Bitcoin, which is my next big investment, any questions on that, or should I keep going, Bill?
No, I think that's really good. And thanks for clarifying that it is within a life insurance policy, right? But it has to be, it's not just any life insurance policy. It needs to be the right kind, right? Exactly, yeah. And I've heard about this for the past 10 years, and it's never really made sense. The reason it's like absolutely wild and incredible is some sneaky senator snuck it into the COVID relief bill. So it just passed in December of 2020. So this is brand new. So if you've looked at this before and you've thought about it before, everything's changed as of 2021. And the new policies that you can get set up are absolutely amazing and, in my opinion, a no-brainer. The only thing you do have to be careful of is if you set it up with the wrong people, they will rob you blind with commission fees and with just fees in general. So I have a really great recommendation. I'm not getting anything for this. This guy's name is Jonathan. You can find him at unbridledwealth.com. That's unbridledwealth.com.
wealth.com. And I've definitely looked at multiple different people, and after comparing them all, I cannot say enough good things about the guy. He's a solid Christian and just an amazing guy. Like, answered hundreds of my questions, and so I would definitely, if you are interested in it, go with somebody trustworthy with low fees. So the nice thing too, I should also mention, is you could theoretically just live off of the loans that you're taking from yourself and never repay that interest. So that was one clarifying question I just found out, is like, okay, I'm getting this loan. When is this interest due? Well, it's never due. At the end of the year, they true everything up and they say you made 9% from the S&P or whatever index fund you're in, and you owe 2.5%, 3% for the loan you took. Do you want to repay anything? What do you want to do? And so it's pretty nice that you don't actually have to make payments on those loans, which I thought was cool.
Oh, that's excellent. Oh.
Yep.
All right. Well, let's move on to crypto.
All right. Yeah, we got a lot to talk about. So crypto is, I'll just say this, my hero, a lot of people's hero in this space, even though he's relatively new on board, his name is Michael Saylor. And he has a really great quote. He said, you don't have to invest all your money in Bitcoin, just the money you want to keep. I think that's very well said. And there's really not enough time to convince anybody to why crypto is so great and why you should be investing in it. But I think I think every single human on earth should educate themselves on Bitcoin. And a really, really great resource on this is Michael Saylor himself. So I'd advise you to go onto YouTube and type in the name Michael Saylor. There's a really great series done with Robert Breedlover. It's called the Saylor series. It's going to take 7 hours out of your life, but it will truly educate you on why Bitcoin is the future and why so many large businesses are now putting their cash reserves into Bitcoin. And really, there's not enough good things I can say about it. If you are at the point of investing, though, you're going to see so much hype and fear of missing out and all this craziness in the crypto world. So I would really advise you to do what my friend has done, and what I'm doing right now is to just invest in Bitcoin and treat it like a Picasso. Like, don't try to buy it and then sell it the next day. Buy it and then let it sit for 5 years, never checking the price. If you do that, you won't have that fear. You won't be all caught up in the moment, because there are swings with it. And it is life-changing wealth, that's for sure. And my personal opinion is, I started investing in 2017. I continued investing when it was 19,000 and at the peak, and I'm continuing to invest today. So I just got, sold my primary property, and I put more of that in, even though it's 56 or something thousand today. So I'm continuing to invest and holding and not selling. It's easy to get caught up in a lot of the altcoins, Ethereum, and all the NFTs and everything else, and do your research. But if you just want to play it safe, research Michael Saylor. Enough said. But I would say that 95% plus of my wealth is in Bitcoin.
Wow. And how do you were telling me before, a way to sort of protect yourself should there be a major, decline in it. Is there some sort of a buffer you put in there?
Yeah, you can. So I did, we were speaking offline, and I did say there is ways, and I do that, where you could put in stop losses. So if you are so afraid that it's going to go down to zero, you can always put in a stop loss. So if, for example, if you buy in today at 55,000, you could put your stop loss in, say, at 40,000. So if the price ever goes down to 40, it automatically sells. And as the price goes up, you would continue to raise your stop loss. So it's at 55 today. Let's say at the end of the year is 100. So you put your stop loss at 75. So you know you're never going to lose money, and you for sure made some money. After speaking, though, with my friend preparing for this call, who is worth a lot of figures, a lot of figures. He just, he started investing in 2012, or 2013. So I really respect his opinion. And he's saying, you know what, just lock it away, buy it, forget it, and don't look at it. And I really respect people who have multiple more zeros than myself. So I'll leave it at that. I don't know why, but I always thought, okay, yeah, to hedge your bets, you should always have some gold and silver. So I have a 5% or so in gold and silver. And I thought it was a matter of like buying bars, but somebody educated me on there's actually a way better way to invest, and that's in the actual mine. You can buy a gold or silver mine, and they have so many more benefits than just buying gold. You can get cash flow, and you can get huge multipliers on your money. The tricky part is to pick the right gold or silver mine. There's hundreds of them around the world, and how do you choose them? And it's crazy. They talk about them as baggers. They'll be like, this is a 5-bagger and this is a 20-bagger. And what they're talking about is you can literally get a 20x return on your money investing in these mines, which is mind-boggling. But how to choose them? And I went to during my career, I was in the IT department there, here and there and everywhere. And one of the smartest guys in the IT department was Don Durrett. And he left one day to just disappeared. And I searched him down and found him, like, Don, where'd you go? And he's like, man, I'm making way more in gold and silver. So I'm going to do this full time. And he started this software called goldstockdata.com. And just highly recommend anyone interested in gold and silver to get his book. You can download a free copy on there, but he has a whole chapter on how to choose the right gold and silver mine. And he also has this whole website. It's like silly cheap. I think it's only $140 for the year or something. And he puts all of his thoughts and the hundreds of different criteria that he looks at in choosing the right mine, where everything might look good, but he knows, hey, don't invest in that country, only invest in these countries, and things like that you would never think of. And it's just been incredible and really humbling to see how much I don't know. But the nice thing is you can go in there and piggyback on other people's knowledge and experience. So definitely check that site out as well. So I feel like I'm out of time, so I'm going to leave real estate for others. And then I guess briefly mention oil and gas. It's profitable at $30 a barrel. Today we're at $80 a barrel. So there's a lot of money to be made. So if you happen to see a mom and pop oil crew that knows what they're doing, that's always a good investment.
Awesome. Wow. That's great stuff, Josh. Thank you so much. God, there's some good stuff there. Man, oh man.
Our final guest is Rachel Richards. At only 27 years of age, Rachel quit her job and retired, living off over $10,000 per month in passive income, which included real estate rental income from 42 doors. Rachel has made a name for herself in the personal finance realm and is also the best-selling author of 2 best-selling personal finance books, Money Honey and Passive Income Aggressive Retirement. Her valuable lessons have helped thousands of female millennials work their way out of financial despair. Rachel, what would you do today if you suddenly received $1 million?
All right, cool. So if I had $1 million here's what I would do. I thought about this a lot, so I actually have it written down in terms of numbers.
I love it.
One of the things I'm doing right now, and I kind of was thinking about my personal circumstance. We're looking at buying a house in Colorado. So I did put $100,000 for a down payment on a house in Colorado, just because I want a place to live.
Good.
But I have a really big chunk, $750,000, that I would want to invest into real estate syndications. Real estate syndications, I'm really excited about.
Talk to me about it.
Yeah. So earlier this year, so as you know a little bit about my story. My husband and I had built a portfolio of almost 40 rental units by the time I was 26. And earlier this year, we sold 34 of those rental units. So our real estate portfolio is back down to 4 doors. We offloaded a lot of them. And for a couple of reasons. Number one, it was a great time to sell and capitalize on a lot of those profits that we had gained over the years. But number two, we had just gotten to a point where we were kind of sick of being landlords. We were sick of dealing with tenants. And when I think about the real estate investing journey, when we started out several years ago, we didn't have any money. I mean, we had to really scrimp to get down payments together. We were hustling. We were willing to work really hard on properties and self-manage properties so that we could make as much money as possible. Fast forward to today. Now we're in a great place. We're really fortunate, and we do have a lot more money. And the whole time, our goal was to have passive income. We wanted our income streams to be as passive as possible. So and I'll talk about what a syndication is, but once we heard this opportunity of investing in real estate syndications, which is much more passive than owning rental properties directly, we decided, well, let's sell some of our properties and transition that money into syndications. And now our income streams can be even more passive than they were. And yeah, we might not be making as much money as we were, but that doesn't matter to us because we value our time more than our money now. So we were eager before to make more money, even though it meant spending more time. Now we're eager to value our time and spend less time and make a little bit less money, if that makes sense.
Yeah,
so that's why I'm like super excited about syndications. Would you like me to kind of explain what a syndication is?
Yeah, explain, for those that don't know, and then how you are, deciding on which syndications too. That's a big one.
Okay, so a syndication, just a quick example, maybe an investor finds a $10 million apartment complex. They can invest in it or purchase it themselves. So they form a syndication, which allows them to raise money from private investors, people like you and me. We can invest in the syndication, and we're not just lending them our money. We are actually investing as equity owners in this apartment complex, which means we are entitled to a share of the profits. So every month or every quarter, we can get a share of the cash flow. And then if they ever sell the apartment complex, we get a share of the profits on sale as well. So it's really cool. You get all the same tax benefits as if you own a rental property directly. You get the depreciation, you get the same K-1 tax form. It's amazing. And the great part is you do all the due diligence up front, you send them the investment, and then you don't do anything. The money just shows up in your bank account. It's the most passive way to invest in real estate that I have found. So I'm all about it. And the reason we couldn't do it in the beginning is because we didn't have enough money. A lot of these, you have to be an accredited investor. And a lot of them, the minimums are like $50,000 or $100,000 to invest, which we didn't have when we were starting out. But we are able to do some of them now. So, and if I had $1 million, I certainly would invest a lot more into syndications.
Oh, that is excellent. Now, do you have a criteria for that? Do you want monthly income? Do you want you're okay with quarterly? Does there have to be an equity play at the end? Some of the specifics in terms of what you're looking for a syndication.
Yeah, I think a lot of them are either monthly or quarterly. It doesn't really matter to me, but I do look for syndications that have strong cash flow. I think the equity play at the end is always great. They always project something. But a lot of these syndications, when you're looking at the projections, you have to remember it's just a projection. They can make it say anything they want it to say, essentially. So you really need to do more due diligence on the syndicator or the team than even the syndication itself. You need to make sure you're about to wire money to somebody that you trust implicitly. So it's hard to find good syndicators. And I definitely recommend that you start by asking for introductions from people that you know and trust. This isn't somebody you want to find on Facebook or on LinkedIn. You want to find people that have invested with syndicators before and can recommend them and know their background and know that they have a good and strong track record of success.
Right, definitely, because I mean the syndication is really only as good as the sponsors and the people that are managing it, right? Because we don't manage it. We're just investors, we're passive investors. So you have to trust in that person making the right decisions. And that's huge. I mean, and that's a lot of money. So you definitely, want to find out as much as you can about those people. And sometimes too, you might get a referral from somebody that you don't really know, but they're really good friends with somebody else that you do know well. And it gets hard, in situations like that, I'm sure.
Oh, for sure. Yeah. But there's a lot of questions you can ask. How many syndications have you completed? What's the worst syndication you've ever done and what happened? Have your investors ever lost money? But the best thing to do is to get an introduction from somebody that you personally know and trust. And there's a great book called The Hands-Off Investor by Brian Burke that I highly recommend.
Oh, great. I haven't heard of that one. That's good. That's awesome. Now, let's say you get this $1 million check. Okay, you've taken out your $100,000 to buy your house in Colorado. Now you've got the rest of it sitting there. Are you going to have that sitting in a place where it's going to be earning income while you're shopping for syndications, or have you thought about that part of it?
Well, so what I did $100K for the down payment. I did $750 for the syndications, and I'll do the rest, and then I'll get to that question because that's a great question. So the rest, I would do $125K in the stock market just because I do want to be diversified with the $1 million. I don't want to have 1 million all in real estate, although I do think real estate is a great place to have your money right now because I do think we're going to be seeing a lot more inflation. And when there's inflation, having your money in real estate and land is the best place to have your money. So I would weigh my portfolio more towards real estate than anything else. So I think that's fine. But I would have a little bit in the stock market. And then I left $25K for fun money because, Bill, something I'm really bad at is rewarding myself and celebrating and having fun. I'm like way too disciplined.
You work so hard.
Way too frugal. Yeah. So I was like, okay, I'll do something fun. I'll go travel, I'll go on a trip, I'll spend some money. So I gave myself a 2.5% allotment to have some fun. Back to your question about where to keep the money. That's a tough call because there's not a great place right now to keep your money in the short term where it can grow significantly. I'm still telling people to use an online high yield savings account if you are going to use the money within the next 6 to 12 months. But I hate that answer because you're only earning 0.4, 0.5%. Right. It's still less than inflation. I mean, you're still losing money. So there's no perfect answer, honestly. I still wouldn't say to put it in the stock market, though, because then you have to pay short-term capital gains tax and you might lose money in the market in the short term. So I don't like that answer either.
Well, thank you so much for being on, Rachel. This is awesome. This has been really, really helpful and very enlightening. I think you hit the nail on the head. There's no other place that I would rather be than in real estate. Sometimes I have to force myself to go into other places like the stock market. It's like, oh no, crypto. Okay,
Yeah, me too.
And it's like, but I know people that are crushing it in crypto. Well, I would just want to thank all of you for your contribution and great information about what you would do with $1 million. I also want to thank all our old dog listeners out there for joining us today. I know there's a lot of other things you could be doing, but the fact that you've taken the time to join us means a lot, and we really appreciate it. Now, please note, Everything presented here today by our 4 great guests can be accessed in our detailed show notes. So there's going to be all kinds of links and other things in there on some of these resources that they mentioned. So you'll definitely want to check that out. But you're going to look for the episode entitled The $1 Million Question. Well, that's the show for today. Remember, cash flow is king and real estate investing the means. Until next time, keep moving forward, and may God bless.
Thank you very much for visiting the Old Dogs REI Network. We would greatly appreciate if you would stop by iTunes and let us know what you think of the show. We would love if you could subscribe to the podcast, give us a 5-star rating, and write a review. The more ratings and reviews we receive, the more visible the podcast will be to others. Thank you.